Hello, I'm Jeff Carlin, a professor in the School of Tax here at Golden Gate University, and I'm here with Dean Fred Soroka, who is Dean of the Braden School of Tax and the School of Accounting. He is also a former partner at PricewaterhouseCoopers, and we're here to briefly discuss some of the recent changes at the end of 2016 that will apply prospectively from now on with respect to due dates of returns and extensions involving partnerships and C corporations. Dean Soroka, can I start asking you what some of the changes are in the partnership area regarding due dates, regarding extensions, and so on?
Sure, Jeff. You practiced tax law, which meant you didn't have to actually deal with all those crazy busy seasons, but anybody who was in a public accounting firm realized that late January through April 15 was just miserable for our staff people. The volume of work that firms tried to put out pushed staff to 70, 80 hours a week pretty regularly. C corporations, you could pull together an estimate of income. The returns were due by March 15. But partnerships, you had until April 15, which curiously is the same date as pretty much all individual partners would file. We were desperate to try to get the K-1s on those partnerships out to all the partners in time. What we'd do would be we'd push our staff pretty hard to get the partnership returns out the door. It meant a lot of errors. Sometimes we didn't have the information right. Worse things could happen than that, though. Back before 2008, you could always request a 6-month extension for your partnership. And if you did that, you didn't have to file the partnership return until October 15. Gee, if you were an individual partner in a partnership, you were probably a partner in a couple of law firms, right?
I was a partner in several law firms and also a partner in several firms that were invested in real estate, and even one that had a little bit of an investment in kiosks around San Francisco that served coffee and pastries. That one didn't work out so well, I must confess. Now, as an individual, I recall that my accountant used to inform me that I would probably have to go on extension because we were always waiting for the partnerships to send out their K-1s.
Right. And before 2008, if the partnership waited till October 15 to file, which was the final due date, and they filed, they'd mail you the K-1 that date, you wouldn't get it till after your personal return was due. Good news for the last 6 years. The partnerships only got extended to September 15. In short, a very accelerated filing season with partnership returns due April 15.
Okay, and that was something that you could accomplish in your practice? You had a number of folks who were doing the partnership work, or were they doing both kinds of work, individuals, corporate tax, partnership tax? How was that broken up?
Smaller firms would probably have everybody do a little bit of everything, get a more balanced perspective. Larger firms, you tended to see the senior people at least specialize, so you just work on partnership return.
Fred, tell us about some of the changes that we are now subject to in the code.
Well, last year in the Surface Transportation Act, Congress said, we know how to fix this. We'll simply accelerate the due date for partnership returns 1 month. So the original partnership, Form 1065, will be due for a calendar year partnership March 15 instead of April 15.
Why is that? What's the point?
Well, the goal would be to have those K-1s generated and then issued out to the partners in March so that more individual partners can file a timely individual return by April 15 of the following year.
Given the increasing sophistication and difficulty involving partnership tax, it seems like accelerating partnership return due dates is going to make it even more difficult, more complex for various practitioners, particularly those who don't have a specialty in preparation and filing of partnership returns.
Yeah, and even those who do have the specialty, Jeff, it compresses what is already a very difficult busy season. One of the messages I've been going around delivering to our alumni is to say this is a wonderful year to have a long conversation with your client about whether you really need to finish that return by the due date. Squeezing what already killed your people to do by April 15 down to March 15 is going to be damaging to our staff. More importantly, it's amazing how many times we had to change partnership returns because a partner had moved, we didn't have their new address, a partner had transferred their interest, a partner had died. Sometimes we just had bad numbers from underlying entities. So that rush to try to get things done timely, I'd argue this is a wonderful year to have a long, deep conversation with your client about just how important is it to get those K-1s out the door, with March 15 being too early for a lot of clients' accounting systems to give us the information we need.
So this is a great opportunity to speak to your client, to communicate with your client, show your client how much you can add value to your client's business.
Exactly. And Congress also reversed that 5-month rule for the extension. So even with the shortening of the period for the original return, if you file an extension, you still get till September 15 to finish the partnership tax return. And if you have individual partners, that gives their accountant 30 days to be able to assemble the return.
Great. What else should we be aware of in terms of some of the changes? Do we have more changes to partnerships, or shall we move on to corporate tax?
Yeah, let's move on to corporate, but let's begin with S corporations, which are kind of partnership wannabes. The good news there is the rules are exactly the same as they were last year. So March 15 is the due date. You extend till September 15. However, practitioners were concerned about accelerating partnership due dates and that causing that lumping of work in their busy season. So Congress tried to be nice. They extended the C corporation, Form 1120 due date, by a month. So partnerships move up to March 15, 1120s move back to April 15. Sounded relatively simple until the politicians got involved. Suddenly, they realized, wait a minute, that will cost us revenue the way that we close out our tax revenue with the government September 30 year end. Therefore, for June 30 fiscal year C corporations only, they're stuck with the old rule of 2.5 months after their year end for another 10 years, because all revenue estimates only run out 10 years. It's goofy, but practitioners have to remember that rule.
So at the end of a particular year, from now on, practitioners really need to focus on their clients' year end and pay special focus to those corporate taxpayers that have the June 30 fiscal year ends.
Yeah, and because politicians love to make things miserable for the rest of us, when you extend your corporate return, the basic rule is still you get 6 months. But then Congress created 2 crazy special rules. The first rule was intended to be nice. Remember those June 30 year-end corporations who only got 2.5 months?
Sure.
Well, Congress said, we're going to give you 7 months on your extension instead of the normal 6. So you're back up to the same amount of time you would have had in the first place. And then for calendar year corporations, remember how I mentioned that you want to get the revenue in by September 15? Well, they decided, why don't we only give calendar year corporations, which is the majority of our clients, 5 months on the extension after the original 3.5, which leaves us at September 15.
No change for accrual versus cash. We can still rely upon the same methods of accounting. There's no forced accrual with respect to these changes to filing.
Correct.
Pretty much.
These don't change, and 446 through 448 are still the same. So we don't see a lot of substantive change just because Congress has been unable to agree much over the course of the last year, and this is an election year. So there aren't that many more changes, although we will talk separately about the changes in partnership audit procedures that are coming.
Okay, and for book purposes, we're still going to use the same fiscal year ends unless there's some attempt to conform our book year ends to our tax year ends here.
I believe that book would still be exactly the same, and if you do change your book year end for a business reason, you'd need to get permission from the government, the IRS, to be able to change your tax year end. That's that Form 1128 that you have to file.
Okay.
When you pull it all together, though, we have one slide that is well worth just sharing with your staff people. If you take a look, this is only 2016 returns. And in the first column, we say, here are all the month-end tax year ends you could have. There still is a 52, 53-week year. You just look at the month it ends in. So a partnership return for 2016 is now due 2.5 months after your fiscal year end. And those dates are all pretty consistent if you take a look at the column for Form 1065. If you look at the column for the 1120S, that's also 2.5 months. Therefore, the dates are very, very consistent. Where we see those crazy special rules for the government to book more revenue come into effect is with our C corporations. So if you look at the original due date for a calendar year corporation with a December 31, 2016 year end, it'll be April 15. Because the District of Columbia has that Emancipation Day on April 15 this year.
I feel freer already.
Yeah, it extends you all the way till April 18. So you get 3 days of additional freedom, but your tax preparer gets 3 days of more of involuntary servitude.
That's great. Thank you very much for that.
Right. Now, if you take a look, that 3.5 months rule applies for all of the corporations except for June 30 year ends. And those June 30 year ends will only get 2.5 months. So the original due date for a June 30 year end C Corp is the same as for a May 31 year end. That's the first weird rule. Now let's go to the extended due date, and what you'll see is Congress gave that month back by giving 7 months extension for June 30, but they were very mean to calendar year corporations, again trying to make sure that that return was filed by the government's fiscal year. So therefore, calendar year corporations don't get the extra month on their extended return. They still have to file by September 15 of the following year.
Well, it sounds like at this point, tax accountants really need to be in contact directly with their clients, particularly in the corporate world. They need to make sure they can get the records and materials so they can do the work on time, particularly for the June 30 year ends. And of course, for partnership tax accountants, same goes. We need to get that information as soon as possible from our clients so that we can meet these deadlines.
Agreed. However, you can only push financial accounting systems so hard. I'd say to make sure that you don't commit a foot fault, give your staff a copy of the extended chart. Don't just tell them to calculate it. Make sure they can look it up for each client. For partnerships, I'd say during the year-end planning, have a longer conversation with your client. Try to figure out whether all those returns really are needed by the original due date, and see if you can't balance your staff's workload a little bit better with this flipping of due dates.
And hopefully the software programs that are out there commercially will conform to these requirements. We'll need to make sure to take a second look to ensure that we're meeting deadlines and that the returns are being performed and filed correctly.
I think for large accounting firms, they all will have good software to be able to make sure that they get all of their deadlines. Smaller firms, I think you're going to have to rely on manual systems.
Okay, so we'll have to set up our records and work papers accordingly.
Mm-hmm.
All right, well, is there anything else from a big picture standpoint? How would you recommend communicating this to our clients? We have a fabulous chart here. Would you recommend that we call them, fax them, email them, call them into the office so we can sit down and discuss these issues? What's the best way to communicate these changes?
My clients wouldn't have been all that interested in a detailed chart. My staff people would be very interested in a detailed chart. My clients would have been interested in knowing, when do I need to get you the information? How soon can I get it back? What's the impact on what the government wants? What's the impact on what my investors want? If you can have that conversation in your year-end planning meeting, I think you're ready for this crazy do-si-do of due dates.
This slideshow looks excellent. Is there a way that folks can get a copy of it? Is there an email address they can perhaps send a request to?
Even better, if you click on the link right below the link to this recording, you'll get a copy of it.
Fabulous. Well, thank you very much, Dean Soroka. That's been very informative. We appreciate very much the work that you've put into this and the advice that you provide. Thank you.
Thanks, Jeff.